Insurance transformation, tech-driven pathways to excellence. The development of new products, the processing of claims, and most significantly, the delivery of a satisfactory experience to clients are all increasingly dependent on the use of digital technology in the insurance sector. In the modern world, information technology has developed into an essential component of manufacturing, and the surging Insurtech wave has provided businesses with a preview of the possibilities presented by cutting-edge digital technologies. As a result, the capabilities of information technology will need to undergo significant transformations as well. For instance, costs will need to be reduced by improving procurement and vendor management, application development and maintenance will need to be streamlined, and information technology will need to be positioned as a strategic partner. The epidemic was something that insurers had no choice but to take in stride. Whether it was enabling their enormous workforces to be productive from home or ensuring that clients and employees felt supported, many businesses have emerged stronger on the other side thanks to their sheer tenacity and resolve to overcome the challenges they faced. The swift deployment of digital tools to address virtual sales, promote better collaboration, and enhance networks and enterprise security was the critical factor in the company's success. In a nutshell, this allowed the company to maintain its businesses working as usual in extraordinary and unforeseeable situations. The epidemic accelerated the need for company chief executive officers and boards of directors to invest in new technology across their whole organization. The epidemic was an important wake-up call for many people, even though many of them had already been on the path to digital transformation for years. It showed them that they needed to move quickly. According to KPMG, 85% of CEOs of insurance companies believe that COVID-19 has sped up the process of digitizing operations, and nearly 4 in 5 believe that the pandemic has created a new sense of urgency to develop new business models and revenue sources. According to the statistics provided by the McKinsey Global Insurance Pool, in the space of the past 2 years, telephonic sales have been eclipsed by digital sales in both the life and property and casualty (P&C) businesses. The insurance business has a long history of being resistant to change. Therefore, recognizing the importance of digital transformation is a step in the right direction. Insurers will be able to keep up with their clients who have already advanced with the times and are growing more at ease with the idea of purchasing policies online if they are willing to adapt and change with the times. Personalized insurance coverage is something that millennials seek, according to recent surveys from the industry. It ought to be the norm to have a high-quality digital experience. However, acknowledging the necessity of digital transformation is only a very small part of the road that lies ahead. Something quite else is at play when it comes to one's ability to choose the appropriate technology to drive the revolution forward. Although just a small number of companies have been successful, many do not have a clear picture of the important technologies they should concentrate on deploying, and roughly a third of them have trouble making decisions quickly. Here are 3 of the most significant technological advancements that are disrupting the insurance industry. These organizations have not yet begun a comprehensive digital transformation. First pathway, the formation of clouds. Cloud computing is becoming increasingly popular among insurance carriers, which are increasingly turning to it for both their core and non-core workloads. The use of hybrid and multiple cloud architectures is becoming increasingly common. This move, in conjunction with the decommissioning of old systems, assists organizations in lowering their capital expenditures as well as their operations expenses, allowing them to be more nimble and responsive so that they can keep up with the quickly shifting marketplace. From our own direct experience with large-scale cloud migration and infrastructure consolidation, we know that insurance companies can anticipate savings of up to 25% of their total cost of ownership, TCO. These cost reductions are necessary in many instances to validate the business case and provide funding for additional transformation. Cloud computing can be used to facilitate and improve governance and compliance, thereby reducing the amount of risk that companies face in a regulatory environment that is always shifting. The solutions are now so advanced that they are more reliable than traditional manual solutions. Furthermore, they offer the flexibility, agility, and scalability that are necessary to satisfy the ever-shifting demands of customers. Cloud platforms also offer secure data storage that can be accessed from anywhere, which enables businesses to leverage intelligent automation as well as advanced data and analytics, which are the 2 themes that are covered in the next segment of the video. Second pathway, automated intelligence and control. Intelligent automation may enhance corporate productivity and establish smart processes, which is especially important in a year that is expected to be marked by thin margins. Intelligent automation can create considerable time savings for insurance companies, which in turn creates operational cost efficiency. For instance, automation can lower the cost of a claim journey by as much as 30%. Two processes that are suitable for automation are the generation of sales leads and the processing of high-frequency, low-cost claims. The staff will be able to devote less time to the analysis of data and more time to work that is more relevant and of a higher level. Subsectors like the global reinsurance market are coming under growing amounts of strain as a result of reasons like the ever-changing capital adequacy standards, frequent weather disasters that lead to greater claims, and the changing business environment as a result of geopolitical and economic difficulties. Reinsurers may be able to improve their profit margins and offer value-added services to their customers by utilizing intelligent automation systems. These services may include improved underwriting margins and lower expense ratios. However, to achieve a high degree of automation, significant modifications need to be made to the infrastructure. This is because each layer of operation is impacted. For instance, the policy administration and claims systems need to be redesigned because the general degree of information technology intensity has increased, new robotics and scripting systems have been implemented, and workflow engines have been modernized. Third pathway, data and analytical work. The most significant asset for insurers today is their data, both in-house and from third parties. A society that is rapidly digitizing is leading to an increase in the number of touchpoints that generate data. This includes data generated by the government, the environment, individuals, and even locations. The capabilities of big data, artificial intelligence, machine learning, deep learning, and other associated technologies such as robotic process automation, RPA, can all be improved by utilizing this. These intelligent decision support mechanisms are already being developed and implemented by top-tier insurance companies, and they are being used to enhance and alter customer service, underwriting, pricing, claims, and a wide variety of other ancillary tasks. According to a study conducted by McKinsey, owing to digitized underwriting, the industry's biggest insurers saw their loss ratios improve by 3 to 5 points, new business premiums climb by 10 to 15%, and retention in profitable categories spiked by 5 to 10%. All of these improvements were made possible by enhanced data and analytics capabilities. The use cases can be as varied as life and annuity, L&A, insurers attempting to predict customer behavior, identifying lapse patterns, and improving cross-selling capabilities, property and casualty, P&C, insurers concentrating on fraud analytics, and reinsurers concentrating on claims automation, and insurance companies concentrating on increasing profitability. Therefore, for insurance businesses to gain a competitive edge, they need to take the measures necessary to establish new infrastructure and invest in new models. There are a lot of benefits that come with digitizing the insurance industry. Not only will enterprises be able to develop and become more robust with the help of intelligent automation, greater data analytics, and cloudification, but they will also be able to satisfy the fast-changing market demands with infrastructure that is secure and scalable. A strategy for transformation that is both sustainable and integrates existing programs will go a long way toward achieving these results. It is now up to insurance firms to define this, move quickly, and unlock the benefits that will shape the defining enterprises of the future. This is the onus that has been placed on them. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.